There are things you should know or take note of before trading the static indices market, or if you're a beginner in the static indices market, or if you're trading the static indices market. There are things you should take note of. There are things you should know before trading this market. And before we get started, if you're new to the channel, please do it to subscribe. And to my returning viewers, shout out to you guys. You guys are the OGs. Let's keep doing what we do, guys. Some of you have been trading this market for some time, but still do not know how to calculate your risk and your reward. Still do not know the amount of money you are willing to risk on a trade and your profit targets. So in this video, I'll be showing you guys how to calculate your risk and your reward. So let's get started. So there's a formula we use in calculating our risk in the static indices market. This formula would help us know our risk in a trade, how much you're willing to risk in a trade, and our targets. Some of you are new to the static indices market. Some of you have been trading the forex market. The way we count pips in the forex market is not the same way we count in the static indices market. So how do we know how much you're willing to risk in a trade, the value in dollars or any currency you're trading? So there's a formula we use in calculating our risks and our reward in the static indices market, which is our entry level minus our stop loss level multiplied by the lot size we're using to trade. We're using volatility 75 index for this practical volatility. So the formula we're using in calculating our risk is our entry level minus our stop level multiplied by our lot size. So the lowest lot size, we'll be using the lowest lot size in this. We'll be using the lowest lot size in this calculation. So our lowest lot size in the 75 index. So our lowest lot size in the volatility 75 index is 0.001. Assume our entry level is at 0.62. Then that's our entry level basically. Then our stop level is at, let's say our stop level is on the blue, on this line. Let's say our stop level is on this red line. So let's check the price level, 38996. So we'll be having 4120.34. So 4120.34 multiplied by, remember our formula, entry minus our stop level multiplied by our lot size. So our lot size is 0.001 times 0.001. So our risk could be in dollars basically. So our risk could be 4.2. So this is basically our risk if you are to get into these sales at this point with our stop loss above this level. With the lowest lot size in a single position, we'll be risking $4 to take this trade. Our risk in this trade will be $4 basically. So you can see I've calculated our risk in this trade. So if you want to increase your lot size, the same thing, you apply the same thing. You multiply or you subtract your entry level from your stop loss level, then you multiply it by, so this should be in negatives basically. So risking $4, so multiply it by the lot size, subtract your entry level from your stop level, then multiply it by the lot size. You understand? Subtract your entry level from your stop level, then multiply it by the lot size you're using. If you're using the one lot size, do the same thing. If you're using the 0.005, the 0.05, 0.01, any lot size you're using, just use the same formula multiplied by the lot size, then you get your risk. The same thing applies to our targets level, our profit targets. How to know our profit targets, how much you're willing to make in the trade. This is basically the same thing. Like our entry level, the point where we got into the trade, our entry level, okay, formula basically, our formula is our entry level multiplied by our lot size. We are using the same lot size, 0.001. So let's go back to the chart and see. So our risk is our entry level is at this point. Okay, we're using the same entry level basically. So our entry level is 382.62 minus, okay, let's say our target level is at this point, 377,874.75. 377,874.75. That's it, right? Yeah. So our target level, let's say this is our target level. So we'll be having 7127.87. That's what we get when we subtract our entry level from our target level. So we'll be getting 7127.87 multiplied by our lot size, which is 0.001. 0.001 lot. So we'll be getting 127.87 dollars. So this will be our target if we are to have our target level at this point. If we are to place our target level at this point, basically, if this is our target level, we'll be getting, okay, this is our risk. Basically, we are risking $4 and our target level is $7, about almost 2:1. Like, we are risking one to get to, we are making $7 with the lowest lot size 0.001 on the volatility 75 index, and we are having a risk of $4, which is fair enough. So if you can extend your target level, fine, depending on what you analyze, fine, depending on your analysis and all of that. So the next is knowing our lot sizes. In the static indices market, there are various static indices. There are various static indices. We have the volatility index, we have the boom and crash market, we have the step index. Unlike the forex market, the lowest lot size on the forex market is 0.01. Yeah, like all the pairs in the forex market, the Euro USD, the GBP USD, the Euro JPY, the SJPY. Minimum lot size is 0.01. Unlike the static indices market, there's no same lot size in the static indices. The volatility 10 index market, that's this particular one, this particular index. The lowest lot size in this index is 0.03 lots, and the 25 index market, that's this one basically. The lowest lot size in this index is 0.05, 0.5 basically. You all can see they're not same, like we don't have same or similar index apart from the 25 1s, this 51s, and the 75 1s, and the volatility are all different. Some indexes are very volatile. 100 index, the 75 index, the 51s, 25 1s. These indexes are very volatile, and we have the step index, which has a minimum losses of 0.1, boom and crash 0.2. That's the crash 1000 index 0.2, the crash one, the boom 1000 index 0.2, the same boom 500 index 0.2. Then on the boom 300 index, which was added last year, 0.1, that's the minimum lot size. Same thing with crash 300, 0.05, that's the minimum lot size. We can see the lot sizes are all different. So these are the important things we should take note of when getting into the static indices market. Knowing how to calculate your risk, knowing how to calculate your reward, knowing the minimum lot sizes you should use on an index before you put a higher lot size. Whenever you trade an index, for example, we traded the 50 index market last, like that was the last index we traded, and now we saw an opportunity on the 75 index. When placing a trade on the 75 index, the lot size won't automatically go back to the lowest lot size. It will be at the last lot size used on the last index. That's the trade, that's the 50 index that, and we use the lowest lot size, which is 3 lots. And the same thing will be on the 75 index. You see your 75 index coming with 3 lots, you think it's the same thing, like you think it's the same lot size, and at the end of the day you end up having a big risk, risking more than what you wished to risk on the trade. So thank you guys for staying to the end of the video. If you're new viewer, please remember to subscribe, and to my returning viewer, shout out to you guys. You guys are the OGs. Let's keep doing what we do, guys, and do have a wonderful day. Peace out.